In this lecture, we are going to discuss bankruptcy ratios. In bankruptcy, people or organizations can reorganize their finances with creditors while keeping their assets. While liquidation occurs when the assets of an individual or organization are used to satisfy creditors' claims. In most cases, those who cannot possibly begin to repay their debt will often enter liquidation as opposed to reorganization. Let's look at the working capital to total assets ratio. The equation is net working capital divided by total assets. This liquidity ratio, in fact, this is a liquidity ratio, we have already seen that. This liquidity ratio, which records net liquid assets relative to total capitalization, is the most valuable indicator of a looming business disaster.